When you begin to understand where we are at the moment in the crypto cycle, this will give you a cool, calm, collected sense of peace. Yes, we have seen massive volatility over the last couple weeks, perhaps even the last couple of months, busting up on Bitcoin all the way through to new all-time highs, up at around $126,000, and then bouncing right back down to, falling right back down to the 80K level. Now, my friends, we're currently sitting at around $91,500 today as I do this video for you, and I just want to assure you that that is already a 25% bounce back from essentially the bottom of this cascading fall that we have been experiencing over the last couple of weeks. However, usually what we do see is that pullbacks are necessary. Now, in the charts in this video that I'm going to share with you, make sure to stay tuned with me right to the very end. It may be a slightly longer video than usual, but that's because I have a lot of alpha news to share with you, and my friend, you don't want to be missing out on any of this news, because at the end of the day, this is going to absolutely transform you, transform your ability to know and to understand what, where, when, and how to accumulate more of these assets over time. So if you appreciate the love, appreciate the content, then make sure to obliterate that like button. And of course, please go ahead and subscribe to the Crypto Bliss community. I am here constantly bringing you videos, making sure that the videos I do bring for you are, of course, high quality. Now, my friends, I did get stopped out of a few trades the other day. However, I did tell you that I got into, well, that was my BTC and my ETH, and I got into a couple other trades, and some of them are in the loss, some of them are in profit. And this is kind of showing us right now that we really should just be taking a step back from the market and waiting for the dust to settle. The dust has not yet settled, and I'm going to show you what could potentially happen and why it could potentially happen, and the charts will speak pretty much all of that to us. But for now, let us go jump right into today's content, starting off with understanding once again the Bitcoin rainbow chart. Now, on this previous video that I did for you here and here, I did say to you on the rainbow chart that we were around the still cheap area when I did that video, and now we're coming into the accumulate area, as you can see right here, right now, my friends. So all I want to say to you is that we're bouncing on the edge of still cheap and accumulate. What makes anyone think we're in a bear market right now? Because we're actually just in a pullback zone. Now, I want to say to you that if we had to draw a line across these tops here right now, okay, and they go all the way back right down to the bottom where Bitcoin started, and all of them align even with the previous all-time high. So all this line up here. Now, as you can see, when I zoom in a little bit, okay, when we hit that line, we had a first pullback there. Then we hit it, we had a deeper pullback. Then we hit it again, and now look at the pullback, okay? The same thing is busy happening here. Look at we hit it, pullback, hit it, pullback, clapped it, very deep pullback, right? So hit it, pullback, hit it, pullback, hit it, deeper pullback. The same pattern is being realized. So for me, we're kind of sitting at around this level here right now. I still see a little bit more potential to the downside, which tells me that we would then go into the accumulate phase of Bitcoin. And why on earth would you not be accumulating Bitcoin when it's down at this end rather than up at this end? Make sense of that for yourself, my friends. But the Fed quietly has just injected $125 billion into the US banking system, making its largest short-term liquidity move since 2020 COVID-19 crisis. Pump it, bro, pump it. Let's see. I love it. You know, at the end of the day, you gotta really just be patient and be light about all of this, because at the end of the day, if you're watching this channel and you're not a whale, I'm not a whale yet, but I certainly understand how the whales are operating. Because right now, if you are not a whale, you are probably selling your Bitcoin at this point in time, when you really should not be selling your Bitcoin at this point in time. The whales are accumulating while others are dumping. Now, yes, we've had JP Morgan, BlackRock, try and bust up MicroStrategy and Master and MSTY. They've taken massive dips, my friends, but at the end of the day, what a great time to accumulate these assets and accumulate some Bitcoin, which is of course the core asset, accumulate MSTY, accumulate MSTR, and earn dividends or revenue from those assets and buy more of the core asset, right? Now you have 3 assets with the underlying core being Bitcoin on all of those assets, and the core being number 1 of it, and you're earning revenue to generate to be able to buy back some more Bitcoin. My friends, this is nonsensical. If you are not in Bitcoin and crypto right now, I don't know what you're doing. But all I can tell you is that all I can show you right now is on the Bitcoin chart. You can see we've had a massive pull down. I would not expect some sort of pullback any moment. However, I do want to say, have a look at my box that's been here for some time now, okay? This box broke through and we immediately pulled back right up to it, which shows me that we're now running into resistance of this area, because we actually broke out, found support, and then broke up back out of it again. But we're not doing that at this point. So right now we're at a resistance level, which was a previous very strong support level, and that was absolutely broken through. So I don't quite see a V-shaped recovery. If we were to do anything, we could pull back here, and then if we tried again and we failed, then my friends, as you can see, that begins to become an M pattern. And essentially once we do break the M pattern, the target is somewhere down here. Now, I have for some time been sharing with you that the bear flag that I drew for us here, which the target was at this critical point here, showed me that we hit the target, right? So what happens from there? Because right now we're actually drawing another bear flag. Just going to have a look at it on the charts nicely. All right, we're drawing another bear flag. There's the pole and there is the flag, right? So once again, we could be potentially seeing another move to the downside. I would not rule this out, okay, because we are still in a downward momentum. And ironically, look at that line, that target that it would bring us to. I mean, guys, that is ridiculous. $55,000, which actually brings us right down to this baseline support here, which on the macro time frame and from the breakout from the previous market's Fibonacci sequence actually brings us right back down to the 786 on this. And we could even come down to the 618, because Bitcoin does like the 618. But my friends, I can't see that happening. I do see possibly we end up at the 70K, because look at this green box here. Massive, massive, massive strong support across the green box zone here right now. So I would expect us to perhaps make a swing up. We hit this zone, which is about the 100,000. There's massive resistance once again in those regions. And if we fail that area, well, we back down to probably the 70K area, like I've been saying to you. I would say that's probably the more likely scenario, that we do get some relief up here, especially with all of the data I'm about to share with you. Especially considering that on the rainbow chart, it is telling us to accumulate. Especially that money and liquidity is been pumping back into the markets. Why do banks need more money in their space, right? Before I go on with that, I want you to understand what news we have to expect starting from Sunday, because this week we are going to see some more volatility come out, and here's why. Starting off with tomorrow, the end of November, the end of the current month, and moving into the last month of the year, which means this is the last candle on the annual, on the monthly time frame, and it starts to move us towards how the annual candle will close. We'll have a look at all of those in a moment, but we have a lot of manufacturing data coming out this week, starting off with China with their manufacturing and non-manufacturing PMI. We then have, now guys, if you want, go to investing.com economic calendar. This is where you can find this data. Just make sure that you have turned it on to your current time here with one of these. I'm in Johannesburg, so that is my current time. And so you can see here that we have Chicago PMI, S&P Global Manufacturing PMI, we have ISM Manufacturing, and manufacturing prices. So the US has a tremendous amount of news, with Fed Chair Powell speaking at 3 a.m. my time. What on earth are they doing speaking at 3 a.m. in South African time? Which means probably around 6 hours, probably around 9 p.m. in US time. So my friends, what on earth is that person doing speaking at that time in the evening? The Euro CPI. We have the US JOLTS openings. Now, we also have FOMC member Bowman speaking. Now, this is where it starts to get juicy, and I didn't know this until I actually saw this, which tells me that things are changing out there. ADP non-farm employment change. This used to be called non-farm payrolls, okay? Which means that this piece of news normally was on the first Friday of the new month, but as you can see, it's now officially on the Wednesday, and this is very interesting because this is going to create a tremendous amount of volatility, and I would be watching that one closely this week. I would also be watching the S&P Global Services PMI, and then lastly on Thursday, the jobless claims. Okay, this is very important. And then on Friday, we do have the core PCE and PCE price indexes. Those are the critical pieces of news you need to be watching out for this week, my friends. With the fear and greed index sitting at 28, yes, it might be higher than it has been in the last 2 or 3 weeks. However, we are still under last month's fear factor, which means we're still in deep fear at this moment. We have until tomorrow evening for this to close, maybe a little bit higher than that. I don't know. That would require a bounce in Bitcoin. I'm not quite sure we're going to see that, but there is one little bit of hope I'm going to give you, that we may see just a little burst up of like $2,000, $3,000, $4,000 on Bitcoin. Okay, that's probably all we're going to see. Now let's move on to the band bubbles. All right, as you can see, why would you not want to take a position in coins like these that have dropped 78% over the last year? Say is down 80% over the last year. Pi is down 80%. ICP 65. Atom. My friends, you're getting these coins at a discount, okay? I wouldn't be buying ZEC right now. I wouldn't be buying Asta, Hype, XMR, BGB, OKB, WBT. I wouldn't be buying those right now. I'd be buying some Pengu, Jupiter, Ton, Wild, Sui, Doge, Pump, Say, some Casper, possibly even some Pape. I mean, maybe not Pape right now. AVAX, Fetch. I would be buying these coins in the red. Why would I be buying them in the red? Because they're at such ridiculous discounts. Now, if I had to look in the monthly time frame, they're actually down a tremendous amount. So I'm confirming with you here that on the yearly time frame and the monthly time frame, these coins are bleeding to death right now. They need some help. And Are you going to stack some bags here? Because that would mean that you would be getting in tremendously earlier than a whole lot of other people, including retail and possibly even some institutions. Now, what you can see is that the Coinbase premium has just turned green and the US institutions are starting to buy again. This is from yesterday. We have been selling tremendously. As you can see, this is where the buying started again and the selling pressure stopped from the 20th odd of November, which when you look at the charts on the 20th odd of November, that was right down here, right? That's when the selling pressure stopped. We've had some buying pressure come back into the charts. Well, cheers, my friends. That's all I can say. And when you look at the global M2, because the Federal Reserve is starting to print money again and just throw money at the banks, the M2 has been exploding. And M2 is the green line here, and the Bitcoin price is the red price. Now, these are causing a massive disparity, and we have never seen anything like it over the course of Bitcoin in such volatility. And this, for me, would tell us that actually the trend comes down when Bitcoin price comes down when M2 money supply is coming down. So we had a bit of a shock here, and we had M2 money supply coming down here, but we picked up and we're kind of finding some support here, and we're starting to grow again, looking as though we're about to break out of this really it's a bull flag, because if I have to draw this and that, there's a bull flag there. Massive bull flag, my friends, on the M2 money supply. They have no other choice but to print money. And I hope you understand this, that there will be times where you take money off the table and there will be times where you put money back on the table. Right now, for me, is not quite the best time, but it is still a decent enough time. Another reason why is because there is 7 billion real estate company Open Door said that they will accept Bitcoin for homes. In other words, you can now trade your Bitcoin in for a home, meaning that the more Bitcoin you own, the less Bitcoin you'll actually spend on buying a home, meaning that you are buying the home for nothing, just about. Yes, you're sacrificing your Bitcoin, but the truth is that you don't want to be paying for a house in fiat when the price of the house in fiat just continues to go up. You want to pay for the house in Bitcoin because the price of Bitcoin is bringing the price of that house down. My friends, do you understand that motive? If you do, make some noise down in the comments below for me. Not only that, but we have $48 billion fintech giant Revolut to integrate the Bitcoin Lightning Network, which is over 50 million new users. My friends, that is massive. And every time gold and copper gold bounces off a historic low, BTC goes on a bull run. Right now, it is busy bouncing off the historic low. Once again, low, massive rally, low, massive rally, low, massive rally, low. Could we have one last little dip and then have our massive rally? If we do have a rally that looks anything like any of these guys, we could go up to 500,000 Bitcoin maybe by the end of next year. I don't know. I definitely don't have a genie that I'm hiding a little lamp. But what I can say to you is that we've had the most amount of time that we have in this accumulation phase right here, where copper gold ratio actually started coming down here, right? So it started coming down. Where was a nice time to start buying? Well, around this area here, obviously, because that's the bottoming out of Bitcoin. So, my friends, it's just giving you a good indication that the rainbow chart isn't lying. This is not a good point to accumulate, and we're very likely going to start to make our way up to higher levels. And if we do that in this little moment right now, where could we be heading? I mean, if we had to end the bull market somewhere over here, we could be seeing 400 to 500,000 Bitcoin. I mean, $1 Bitcoin. Why would we not hit that is my question. Now, one thing I want to point out to you here, before I start giving you a little bit of the risk news that you need to know and understand. First of all, These are the dates that Bitcoin's price was on Thanksgiving. 249, 1251, 813. Bear market crash, right? 376, 328, even lower. Then bull market 739, 87731. Then a crash 4000. Then a higher move up, but not quite that level, right? 2020 at 18,000, we had 58,000, we had a bear market crash. Then we picked up, and then we picked up again in 2024, and 24 was 95. Look at where we are right now, right? I think you see the patterns that happen. We have a year where there's a higher price in the bull case, and then there's a lower price, and then we double that price pretty much thereafter every single time on this chart. So could we expect an $180,000 Bitcoin by next year's Thanksgiving? I would like to know your comments down in the description. In the comments section below. Mr. Trump says that he will keep the stock market at all-time highs, and this will be absolutely giga bullish for Bitcoin and crypto. Now, before I get into the charts, I want to go over something with you. This is the risk side of everything. This is no limit, no gains. I did start following his page. He bought his first Bitcoin in below $100 in 2013, and he's been DCAing since then, and billion-dollar dreams. That's really cool and admirable. But a major financial shock is lining up for 26, and the warning signals are already here. Something big is coming for 26, and no, it's not another banking meltdown or a typical recession cycle. This time, the pressure is sitting right at the core of the global system: sovereign bonds. The first red flag, the MOVE index, bond volatility, is waking up. Right now, there's 3 silent fault lines around the world are straining at the same time. The US Treasury funding, Japan's yen carry trade system, China's over-leveraged credit machine. Any one of these snapping would be enough to shake the world. All 3 converging in 26, everything falls apart. Let's start with the one building the fastest, which is the US Treasury funding shock. In 26, the US has to issue record levels of debt at the same time. In other words, the money printers are going to go absolutely ballistic. Deficits are ballooning, interest costs are climbing, foreign demand is fading, dealers are stretched thin, and auctions are showing stress. This means that they have no other choice but to print the money. Because where are they going to get the money to save the economy? They can't. They have to print. And sometimes they do, unfortunately, let the economy blip, reset, and then they print the money. So I don't know what they're going to do. Maybe they're going to steal everybody's liquidity across the world. Who absolutely knows? It could be a black swan event. But I will touch base on that in a short moment when I've finished this particular one on the US. In other words, the perfect recipe for a failed or severely strained long-end treasury auction. And this isn't speculation. It's already visible in the data. Weaker auctions, bigger tails, fading indirect bids, rising volatility at the long end. If this feels familiar, it should. This is exactly how the UK's gilt crisis kicked off in 22. Only now the scale is global. So why does this matter so much? Because everything takes its cue from treasuries. Mortgages, corporate credit, global FX, emerging market borrowing, repo markets, derivatives, collateral. If the long end shakes, the entire system shakes and possibly breaks. Now, before I move on to Japan, I want to point out the good news is that we are looking at a potential of an 86% rate cut, an 86% potential of another rate cut happening on the 10th of December. Now, I just want to point something out here right now to you, my beautiful community. But before I do, make sure you are subscribed to the Crypto Bliss community. If you are enjoying this, obliterate the like button and share this with your friends and family. Because right now, while we sit at this current point, the whole world, especially us crypto traders, are expecting to have a rate cut in December. doesn't mean that we will have the rate cut in December. And if they didn't do the rate cut in December, what I can tell you is that that particular action could actually act as the black swan event that we could have, that could absolutely obliterate the rest of the liquidity to the downside, possibly taking us to that 50k level, 55k level on Bitcoin. I'm not saying it will, and I'm not saying it won't. I don't know. Nobody can actually know. But what we do know is that we're in a downward trend currently. The buying volume isn't very strong. We're under a very strong resistance level, and the next support level below us is down at $68 to $73,000. That's the next support level, my friends. Okay, so if you can understand where we're at, I'm putting this on the table. I'm not saying it will happen. I'm not saying it won't happen, but that would be the black swan event for me. Now let's move on to Japan, because Japan is the world's biggest foreign buyer of treasuries and the backbone of global carry trades. If USD JPY rockets to 160 to 180, the BOJ has to step in and carry trades start to unwind, Japanese pensions sell foreign bonds, and treasury volatility shoots even higher. Japan doesn't just get hit, it amplifies the shock. And then there's China. Behind the curtain sits a $9 to $11 trillion local government debt bubble. A local government debt bubble. Imagine the catastrophic effect of the wind coming out of a $9 to $11 trillion bubble on the rest of the world, my friends. Woo! We are in for some serious turmoil, potentially, if these things start to collapse. One major LGFG or SOE failure, yuan devalues, emerging markets panic, commodities jump, the dollar spikes, US yields jump again. Now, if the dollar spikes, that's going to be badass for Bitcoin. So, is this possibly the other potential catalyst that we could be seeing to create the black swan event? Maybe they do pop the Chinese bubble first. Maybe it is the first domino to fall. I don't know, but it becomes the amplifier in the chain. Undoubtedly so. So what actually sets off the 2026 event? Possibly a weak US 10-year or 30-year auction. One bad auction could be the moment yields spike, dealers step back, the dollar surges, global funding tightens, and risk assets are forced to reprice all at once. This is huge, my friends. So here's what happens next. Phase 1. Long end yields explode higher, the dollar rips upward, liquidity disappears, Japan intervenes, the offshore yuan drops, credit spreads widen, Bitcoin and tech sell off hard, silver trails gold, equities fall 20 to 30%. This is a funding shock, not a solvency crisis, and it moves fast. I think you get the point that there is potentially a black swan event coming up, and maybe nobody is seeing this, but it doesn't mean that this isn't a good time to buy Bitcoin while it's still cheap and down. You can still buy more if it goes further down, but if it does go further down, it's only gonna go down another, another 17 to 20%. Come on, guys, it's not that much, okay? Just stay out of the leverage, that's all. Buy it on spot and stay out of the leverage. You will be so happy in the next year to 3 years, 5 years, and for the rest of your life because you didn't sell your Bitcoin, you just accumulated your Bitcoin. Now, then comes the inevitable central bank response, because liquidity injections, swap lines, treasury buybacks may even temporarily curb control. It stabilizes the system, but it floods it with liquidity. And that liquidity sets off phase 2. So in other words, what's being said here is, boom, a sharp drop down, which we have already had quite a drop down. But it isn't quite the drop that we're saying before there's a major buy area down here. And we're going to talk about that in a short little moment. Give me a moment to get through this. And I hope you're still with me. If you are with me, obliterate that like button. So phase 2 is where the opportunity shows up. Real yields will collapse, gold breaks out, silver leads, Bitcoin recovers, commodities surge, and the dollar finally peaks. That's the start of the 26-28 inflation wave. And why does everything point to 26? Because multiple global stress cycles are all hitting their peak at once. And the early warning signal is already blinking. The MOVE index is climbing. When MOVE and USD JPY and the yuan and 10-year yields all start pushing in the same direction, you're looking at a 1 to 3 month countdown clock. So the final thought is the world can absorb a recession. I do agree with that. What it can't absorb is a disorderly treasury market. When 26 is when that pressure finally breaks. First with a funding shock, and then with the biggest hard asset bull run of the decade. All right, have a look at this, because this is a chart that we've been speaking about for some time, with a great shock in 2026 possibly coming about. My friends, we are going to see massive money come into the market going forward. Now, what I do want to share with you is the liquidation heat map. Now, first of all, this is the 24-hour. It's model number 2, and the threshold is 1. I want to turn the threshold down to about 75, okay? Because you can see a bit better. As you can see on the 24-hour chart, there's liquidity grab down below us, and there's liquidity grab above us. I would expect us to liquidity grab up to the 93,000 area, hit all of the stop losses in that area, and then there's going to be a massive flush down to grab the liquidity back under the 90k area, bringing us back down into the potential of the 88,000 at this point. Now I want to give you a little bit more of an insight. Let's go onto the 2-week chart, okay, to give you a stronger understanding of where the overall is currently. All right, now you can see a little bit more clearly. There's a lot of liquidity down here, but there's certainly more liquidity up here. So could we bust out and break up back into the 100k level and possibly whack this 100k level? But really, we're looking at about $120 million potential up at the top here. I mean, this is heavy in this area. I mean, we got a lot of liquidity above us. So I would say that they're probably going to grab us, catch us, pull us back down, and bring us right back down to those liquidity areas. And then once again, the higher we go, the harder it becomes to see where all of the liquidity is. But when you look at the charts more clearly, look at all of the liquidity above us and look at all of the liquidity below us. All of the liquidity below us starts to come all the way down to $68,000 here, my friends. I'm saying to you, I believe we're probably going to do that and then push up. We're about to see some crazy things. So, my friends, I don't want you to be caught off guard. What I do want you to do is make sure that you are just DCAing, whether it's going down or up, just very little. The same thing with Ethereum. I'm only spot buying small quantities of Ethereum at the moment. Yes, Ethereum did hit this level that essentially we're seeking for it to hit on Bitcoin, but I think Ethereum could come back down really to the 2,400 to the 2,200 level really before it does anything else here. And the one chart, how ironic is this? I have drawn this months ago for us, actually in July already. Even before July, I probably drew it around this area here, somewhere around this area, because essentially what we've seen here now is we followed my chart. I said it would come back up. Ironically, look at where it hit, and it came back down at the same area. We're kind of tapping up here, so I would presume we probably get up here with a little bit of a Bitcoin pump back up to the 60% level on the Bitcoin dominance. But I would then expect us to start dropping and going into a massive altcoin season cycle coming soon and bringing us down into the 45% zone, which is the overall Bitcoin dominance level. And it shows us this by Bitcoin being able to pump up to probably this level once again, where you can see very clearly all of the resistance in this zone. And I would expect us then to continue the fall down for now and bring us down into this zone right here, the 70 to 71K zone. I'm just sharing that with you right now. My trades here, I'll show you what trades I currently have open. I have a Carver, Ton, ETH, JTO, Form, and Plume. You probably haven't even heard of any of them. They're down. Some of them are down, as you can see here. Like I said, it's really not a good time to trade. The only trade I think I'm going to be holding and adding to on the way down is Ethereum and possibly Ton and Carver. Those are the only ones. Anything else I probably am going to get rid of very soon, my friends, especially if they're in the red. Sometimes it's better to just cut your losses and walk away. That's the point. You got to try based on certain information. And I found an incredibly awesome secret tool that has given me an idea of where to look at potential trades. But there is the macro factors that do come into play when we are considering entering a trade. And those macro factors honestly start off with Bitcoin, then Ethereum. When Bitcoin moves, Ethereum follows, and then the rest will follow Ethereum. So if you've enjoyed this, please make sure you are already subscribed to the Crypto Bliss community. And if you're not, go ahead and do it. It doesn't cost you anything, won't do anything to you. It's just going to give you these videos with awesome alpha in it from my channel. And if you don't like it, you can always unsubscribe. So thanks for being here. I do appreciate you. And make sure to use my Bybit link down below. Get yourself up to $30,000 deposit bonus and come and trade with me, my friends. We're about to make some killer gains in this cycle. And if you believe so, then obliterate that like button. We'll see you on the next one.